Let's dive into combination policies. These policies combine different types of coverage, such as whole life, with term riders to meet a variety of insurance needs. Let's say Pearl purchases a $100,000 whole life policy that will cover her until age 100. They want to make sure if Pearl dies, they have enough money to send their children to college, since Pearl is the breadwinner. Pearl estimates they will need about $100,000 for each child's education. To cover this need, Pearl can add a $100,000 20-year term rider to her whole life policy for Malik's education and a $100,000 20-year term rider for Ashley's education that pays in the event of Pearl's death. In 20 years, both children will be at least 22 years old and out of college, so the term riders will no longer be necessary. By adding these term riders to her whole life policy, Pearl has created a multiple protection policy. The $100,000 whole life coverage is the base, and the term riders are the multiple layers of protection for a specific time period. With the two $100,000 term riders, Pearl has tripled her total coverage to $300,000 for the next 20 years. Pearl could have simply purchased one $200,000 term rider, but by using separate riders for each child, we can see how different levels of multiple protection can be created. Pearl could have gone from single protection to triple protection with one rider, or she could stagger the riders over time. Keep in mind, if she decides to add additional layers after the initial application, she must prove insurability. Let's say Pearl and Dawn decide to have another child when Pearl is 40. She could add another $100,000 20-year term rider to cover that child's education. From ages 30 to 40, she would have triple protection. Then from 40 to 50, she'd have quadruple protection, and finally from 50 to 60, she'd be down to double protection. The key is that Pearl would need to prove insurability at age 40 to add the new term rider. In addition to term riders for the insured, there are also riders available for spouses and children. A spouse term rider, STR, allows Pearl to insure Dawn under her policy, while a child term rider, CTR, would cover Malik and Ashley. These riders are usually quite affordable, and the CTR typically covers all children under one premium, regardless of how many children there are. Typically until age 21, but some insurers will go to age 25. Another option is a family policy, which is a pre-packaged combination of whole life for the primary breadwinner and term coverage for the spouse and children. In Pearl's case, she would have whole life, Dawn would have a 20-year term rider, and the children would be covered by a term rider until age 21. This is similar to Pearl purchasing a whole life policy and adding term riders for her family, but the family policy bundles it all together from the start. It is like a value meal. Pearl gets an entree, a side, and a beverage for one low price. Next, we will discuss some riders that can be added to enhance the death benefit in a whole life policy. Great job on completing this video. Now it's time to test your comprehension of the concepts we just discussed. This video corresponds to ICAP quiz course number 20. Remember that number. Click the link in the comments section to access the Insurance Class Assistance Program, also known as ICAP. Once you're there, look for quiz course number 20. This quiz will help us see if you truly understand the material and are prepared to move on to the next video. Don't forget, ICAP quiz course number 20. Good luck and keep up the great work.